go. All right. Hi, everyone. Welcome to today's webinar. My name is Sharon. I go by she, her pronouns, and I am the Financial Capacity and Training Manager here at FreeFrom. And today we're going to be talking about delving into your credit report without shame or judgment. This is a topic that is going to be a little bit heavy. It's going to be one that may take a little bit of time to really delve into. So if at any point you need to walk away, if you need to get a drink of water, please do so. I don't want you to feel beholden, as this will be recorded, and I will also send this out to everyone. Okay. So what's happening today? So we're going to start with a grounding and a reflection exercise. I'm going to introduce you to FreeFrom, and then we'll go through understanding credit and your credit score. So it'll be a brief overview of what that looks like. We're going to take a break in the middle, and then we're going to go through what does it actually look like to pull your credit score or credit report. And for those of you who want to pull your credit report with me going along the steps, please feel free to do so. And for those of you who just want to watch, that's totally okay too. Okay, and then we'll go through understanding your credit report because oftentimes it is really, really confusing. So we'll go through what does it look like. We'll think about how do we organize the contents of a credit report, and then we'll go through how do we address that is a result of harm, and then we'll have time for reflections and questions. I like to do an open invitation anytime I do a webinar that is more sensitive, that is talking about financial harm, debt, money trauma, really just thinking about paying attention to what you're feeling and where in your body you are feeling it. And then if at any point you need to, please get up and move around. If you like to fiddle with something, that's totally fine as well. Okay, so let's just take a minute here to pause and breathe. I'm going to invite everyone to just take a minute to relax. Talking about credit can be stressful. Thinking about your credit score can be stressful. And just for the next 90 minutes, I'm hoping that we can let loose all of the judgments that we have, the shame that we may be feeling about our credit score, and just learn and to be in community with one another. Okay. So think about a body position that is good for you. One of the questions I like to ask in this grounding is checking in with yourself. How are you feeling? And thinking about what are you bringing into this space with you and what do you want to be leaving behind? And then when you're ready, and if you haven't yet, I would love to see some introductions in the chat. You can share where you're coming in from, if you're coming in from an organization, or if you are a survivor. If there's anything that's coming up for you right now as you're thinking about the grounding, if you can share that in the chat, that would be great. Okay. So I would love to hear from you all. What is one word or phrase that comes up when you think about credit? So one word or phrase that comes up for you when you think about credit. Loans, control, bad, damaged, debt, burden. Yeah. So we're not even thinking about debt. We're not even thinking about debt, but when we think about credit, a lot of us associate that with debt. We associate it with burden and damage, with loans, non-existent, bills, stressful. So it sounds like generally there is a negative association that many of us have with credit. Important, made up. Most definitely. Okay, so I just want all of us to think about the words that we're associating with it, and then really to give ourselves, all of us, the space to sit with this information, to give ourselves a lot of grace. Oftentimes when we think about financial harm and survivorship, there is a lot of judgment from other people, but really a lot of us are hardest on ourselves, right? We need to be the ones that need to be kindest to ourselves. We're the ones that need to be more thoughtful to ourselves. We're the ones that, need to give ourselves the grace. Okay. I'm seeing some more words come in. Bills, stressful, finance can be a weapon, most definitely. Okay. So a little bit about FreeFrom is we are a 501c3. We're based in Los Angeles, and really our mission and our vision is to envision a world where survivors have sustaining income, savings, and credit, which we're talking about today, with which to build wealth and the resources to support individual, intergenerational, and community healing. And we do that in a lot of different ways. We use technology, which I'll talk a little bit about today. We'll use peer-to-peer networks. We'll use training programs. And we'll use policy advocacy and social enterprise models and cross-sector solutions. So really, we're thinking about how do we support survivors in this world where so often what happens in the movement right now is we think about immediate needs like crisis, housing, food, but we don't think about the long-term needs in terms of like, where is the survivor in 5 years? Where are we going to be if we don't address the credit issues, if we don't address the debt that is happening or that has happened? So let's go through understanding credit first. And I do this slide not because I want all of us to have a shared language about the way we talk about credit. Talking about credit is not just about it is bad or it is good, but really thinking about how do we talk about it? What is the words that we use when we talk about credit for ourselves? So first and foremost, what is credit at the very basic level? We have a lot of word associations. Some people said debt, some people said harmful, some people said it was freedom, loans. Credit is really at the very root of it. It's just your ability to borrow money from traditional institutional lenders like banks and mortgage companies. That's really oftentimes what it comes down to. A lot of us associate credit with a credit score or credit report or credit cards, right? So if credit is just simply the ability to borrow money, a credit score is the number that the traditional lenders will use to determine the likelihood of that being paid back. So typically what happens is if your credit score is lower, then traditional lenders may not be as likely to let you borrow money at a good interest rate, as opposed to if your credit score is higher, then they will be more likely to allow you to borrow money and give you a better interest rate. Something that I really want to emphasize here, and something that I'm going to emphasize throughout our time together today, is that your credit score is not good or bad, right? We don't have a bad credit score. We don't have a good credit score. It just is, right? It is not an indication of how responsible you are or how responsible you're not. So often we hear if you have a bad credit score, if you have a lot of debt, that means you're quote unquote not responsible. And that just is not the truth, especially for people who have experienced harm, and especially those of us who have experienced economic harm. So really, as we go through this time today, I really want to get through, if you just leave with one thing today, just thinking about the one thing I would love for all of us to think about is your credit score is not good or bad. It just is, right? It is just a reflection of the circumstances in which you have experienced. And then thinking through what is a credit report and what is the credit report that we're going to be going through today. A credit report is a history and a record of all of the open and closed accounts that you have. So all of the credit cards you have, all of the loans you have out, whether that's student loans or auto loans, it's just simply a history, okay? And there are 3 major credit reporting agencies that lenders will use, and those are Equifax, Experian, and TransUnion. So you don't really need to know the difference between the 3. It's just helpful to know what those 3 are. Okay. So credit is simply just your ability to borrow money. A credit score is the number that lenders will use to determine the likelihood of being paid back. And the credit report is just the history and the record of all of the open and closed accounts that you have. Okay. So why is credit important? In the United States, a lot of the financial institutions will use credit scores and reports to determine a person's, I put this in quotes, trustworthiness to pay the loan back. They will say if a person has a high credit score, that means they're quote unquote trustworthy. And if they have a low credit score, that means they are not trustworthy to pay the loan back. And that, again, simply is not the case. However, the institutions are set up in a way that if your credit score is higher, then it means that you're more likely to be approved for loans and more likely to get better interest rates and terms for your loans. So oftentimes what happens for people who have lower credit scores and they are not able to go through traditional institutional financial lenders is that they'll be forced to go, in alternative paths such as, this is where often payday loans come in, right? Payday loans, more people can get approved for them, but the interest rates are so high. I think the average payday loan now is a 400% interest rate, 400%. But oftentimes it's the only choice that people have because our institutions are not set up in a way that it supports survivors. Okay. And then to Yvette's point, oftentimes with credit, it also is a factor, not just when you're making loans or applying for loans, but also when you're applying for housing, right? Landlords will use your credit score when applying for housing. They'll use your credit report to see if you've had any evictions. Utility companies will open your credit report and see if you've had what your credit score is, what your previous experiences with has been with other lenders. And then we'll go into why utility company and other service-based companies are considered credit. And then there's also insurance companies, right? They'll also look at this is not for everyone, but they will also look at your credit score and your credit report to determine what kind of insurance rate do we want to give this person. Again, this is what the institutions are. This is not in any way a reflection of how trustworthy you are, how trustworthy you are not, how trustworthy our clients are versus not. It just is what the institutions that we have currently. Okay, so types of credit. So there's really three buckets of credit that we can really get into. So revolving is a type of credit where you have a credit limit, which is the maximum that you can spend, and you determine how much or how little to pay that off. So this is most often is credit cards, right? Let's say you have a $2,000 limit credit card and you spend $500 of it and you pay $15 at the end of the month. Then you have a balance of $1,000 minus the $15. And that is a revolving credit. So you can pay it, in full every month, or you don't have to pay it in full every month. You will just be charged interest. Installment credit is where you borrow the full amount up front and then it's paid back consistently over a set period of time. So the most common example of this are loans. So student loans, if you borrow $20,000 at the beginning of the semester, then you have to pay that back over the span of the time that is within your contract. Auto loans are often a big one here, where you borrow $10,000 for a car or $5,000 for a car, and then over the next, oftentimes 5 or 6 years, you pay that back. Same with mortgages. So revolving credit is more how credit cards work, and then installment credit is where you borrow the lump sum upfront. And then the third type of service credit that we don't really think about often as credit is a service credit. So these are agreements that you enter in with a service provider, such as utilities, gym memberships, often phone providers, and you say, I will pay you, you receive a service, and then you are agreeing to pay for those services at the end of the month. Okay. So we went through the types of credit: revolving, installment, service. And so we also want to think about secure versus unsecured debt, or secure versus unsecured credit, because this also is related to debt, which a lot of people were relating back to credit. So secure credit means that there is an asset associated with your loan. So this is for mortgages and auto loans oftentimes. And what happens with these secure credit is that if you don't pay, the bank or the lender back within a couple of months, then they can seize your assets. Unsecured credit is when there is no asset associated with the loan. So these are student loans, medical bills, credit cards. So really with unsecured credit, it's thinking about if I don't pay this back, they can't take anything from me, versus an auto loan where if you don't pay your loan, then they can seize your car, they can repossess your car. Because of this, oftentimes when we think about debt management, we say if you have loans and you have to pick and choose what you are going to pay, you want and you need your assets, you want to pay those first, right? You want to pay your auto loan before your medical bill, because if you don't pay your auto loan, they'll take your car. But if you don't pay your medical bill, it'll just ding your credit versus them taking something physically from you that you may need. Okay. That was just kind of credit 101. Let's just take a quick stretch because I downloaded a lot of information to you. Does anyone have any questions at this point that maybe I can answer in the Q&A or in the chat? And yes, I will be sending out a copy of the recording. What if you don't want the asset? So a question came in that says, what if you don't want the asset? So if you are saying you don't want the asset, like I'm going to assume maybe it's a car and you don't want it anymore. Okay. A car and you don't want it anymore, then you can do one of two things. You can sell the car and then use that to try to recoup your damages or recoup the, the cost of what it would have been that you have your loan back. Oftentimes what happens with a car is that what you owe is so much more than what you can get, what the car is worth. So that's where a lot of people struggle with a car. So it really is at that point just thinking about your options and thinking about what is going to be the best thing for me, and thinking about what is going to give you the best outcome in terms of having the most money in your bank account at the end of the month. And really that situation varies depending on how old the car is, how much the car is worth, and then how much you owe on that car. And Sherry shared, jobs can check your credit as well, especially in financial institutions. It can prevent employment. Most definitely. Thank you for sharing, Sherry. Okay. Please, everyone, take a quick stretch because that was a lot of information. Any other questions I can answer? Okay. Let's go through understanding your credit score. So again, before we get into what this credit score is, please remember your credit score is not a reflection of who you are, of your trustworthiness, of your responsible attributes. It just is a reflection. It's just the number of some circumstances in your life. It doesn't reflect anything about you or who you are as a person. It's not good or bad. So I really want to try to stay away from the terms good credit versus bad credit. Okay. Okay. So what is a credit score? So again, a credit score is a number that traditional lenders, banks, financial institutions, landlords will use to determine the likelihood of being paid back. So you may also see this called as a FICO score. Again, your credit score is not good or bad. I really, I know I'm repeating myself, but really want to emphasize your credit score is not good or bad. It just is. It's not an indication of how responsible you are or are not. Okay. The only thing that a credit score will do is that the higher your credit score, the easier it will be for you to access loans in the traditional banking sense, in the traditional financial institutions, and the lower your interest rates will be. The lower your credit score, the harder it is for you to access typical institutional financial lenders, and usually your interest rates will be higher. Again, with the 3 credit bureaus, Equifax, Experian, TransUnion, you will for free be able to check your credit report for all 3 of them. And today we'll be going through one of them. Okay. So what makes up a credit score? 35% is payment history. Are you making your payments on time? 30% is credit utilization. So credit utilization is how much have you borrowed / used versus how much you have available to borrow. And this is a little bit confusing. So think about if you have a credit card that has a $5,000 limit and you use $100. That's your utilization is what we call it. The lower your utilization compared to how much you have available to borrow, which in this case is your credit limit, the higher your credit score will be. The closer you get to that $5,000, the closer you get to your credit limit, the lower your credit the higher your credit utilization and the lower your credit score. Okay, so just think about it. The lower your utilization, the higher your credit score. The higher your utilization, the lower your credit score. 15% is length of credit histories, and this is the average, right? So it's thinking about on average, with all of the different loans that you have out, the longer your average length of credit history, the higher your credit score will be. And the shorter your length of credit history, the lower your credit score will be. So where this comes into play is if for some reason you open up, let's say you had 2 credit cards that you've had for 10 years. And then in the last 2 months, you've opened up 5 different credit cards. Then, or, 3 credit cards, 1 car loan, and 1 medical bill or something like that. What happens is the more recent that you have opened up these new lines of credit, your average begins to get shorter. It begins to get shorter because you, in the last 2 or 3 or 4 months, have opened up a lot of accounts. And so now what your credit history used to be 10 years may now be 3 average years. And then 10% is a variety of credit mix, a variety of types of credit. So you want to think about if you have a mix of credit cards and car loans and a mortgage and student loans, then if you have a variety of mix, then you're more likely to have a higher credit score versus if you just have one type of credit, maybe you only have a credit card or you only have auto loans, then your credit score may be lower. But again, it's only 10%, so it's not that's not going to be a super effective. And then thinking about the number of new inquiries. So this is where we think about the difference between a hard inquiry and a soft inquiry. A hard inquiry is one where a lender who is looking to let you borrow money is looking into your credit report versus a soft inquiry, maybe something like Credit Karma, or maybe a credit card company, for those of you who get those letters in the mail that says you have a promotional offer. They did a soft inquiry on your account, and those do not affect your credit score. But if you're trying to buy a car, if you're looking for a personal loan, and you're going to 3 different dealerships and 4 different banks, and they're all doing hard inquiries, then that is going to affect your credit score. Okay, I'm going to answer some questions that I see. Is credit history the length of time since your credit opened or the length of time you've had one account open? So your credit history is going to start from the very first moment that you opened any kind of line of credit. So if you were 18 and you opened a credit card and now you're 38 years old, you have one card that's 20 years old. And that's great. But if you have in the last 6 months opened up 4 different cards, then it's taking the average length of all of your cards, all of your lines of credit open. And if I did not answer your question for anyone, please feel free to ask it at the end as well. Okay. These questions are coming in quickly, so I am going to move on for now, and then I'll answer questions at the end. Where can I find my credit score? So if you are thinking through, I don't know what my credit score is, and that's a totally valid point. A lot of us don't know where to find it. We don't want to look for it because, it may be harmful for us. We may be triggered by it. We may not want to. So again, if you don't want to, that's totally okay. This is really for people who are in a place in their lives where they want to find out their credit score. Okay. So you can get free estimates of your credit score online. So if you have anything like Credit Karma, Credit Sesame, credit.com, you can look at your credit score for free. You have to put in a lot of personal information like your social security number. You have to put in, your addresses and that kind of stuff. But if that's something that you're comfortable doing, you will be able to get a free estimate. Again, it's not going to be, an exact, they pull from a lot of different sources. So they'll give you a ballpark. And then if you have a credit card with a financial institutions, like Bank of America, Wells Fargo, Chase, then wherever you have your credit card with, whatever the bank is, you should be able to see in the app or online, they'll give you an estimate of your credit score as well. And then if you want a more accurate score, you can go to myfico.com. It's $20 per bureau. So there's 3 bureaus. So if you wanted to see it for all 3 bureaus, it would be $60. Or you can go to annualcreditreport.com, which is $8 per bureau. Also, if you are applying for a loan, you can also ask the person that you or the institution that you are applying for, thinking through and ask them, what does my credit score come out as? And they may or may not tell you. Okay. Let's take a break. For everyone who wants to take a break, go ahead and take a break. I'll answer a couple questions right now. And we're taking a break now because we're going to be delving into your credit, report when we come back. Okay, so actually, I actually want everyone to take a break. So let's actually take a break. And then we'll have plenty of time at the end for Q&A. So please have your questions. If you don't want to have your questions out for the public, you can message it to me privately, or you can put in the Q&A. Okay, let's take a 10-minute break and let's come back it'll be 11:40 in Pacific Coast. So wherever you are, let's just come back in 10 minutes. All right. Okay, everyone. If you're back, please send me a Y or a back in the chat just so I know people are back. A lot of emojis. Okay. And I know a lot of people have questions and we'll have time at the end. Okay. I hope everyone got some water, went to the bathroom, was able to stretch, walk around a little bit. Okay, so pulling your credit report. So before we pull your credit report, you can do this live. With community, I'll walk you through step by step how to pull your credit reports. I would actually love to see in the chat how many people have pulled their credit report in the last, let's say, 6 months. Maybe some yes or no. I'm seeing a lot of yeses, some no's. I'm seeing yeses. Okay. Oh, listen. Okay. A couple people have not. A lot of people have. Okay. Yes, through Credit Karma. Okay. So for those of you who have, this may be a little bit of a review. Okay, for those of you who have pulled your credit report, let's ask, was it easy to understand? Was it easy to understand? Was it easy to organize? Did you understand your credit report? Yes, no, yes. Okay. Yes, and they have my credit score. Okay. Looks like a lot of people are using Credit Karma for this. Okay. So if you would like, for those of you who haven't ever pulled your credit report, that's okay. I will walk you through it today, but if you do not want to, that's okay too. You don't have to pull your credit report if you're not ready to, engage with that yet. So for those of us who are hoping to pull our credit report today, what we're going to do is we're going to go to www.annualcreditreport.com. So usually you're only allowed to get one per year from each of the 3 credit bureaus, but because it's COVID, they are allowing people to check them weekly, which is great. So again, www.annualcreditreport.com is going to be the site where you go to get your credit report. If I'm moving too quickly, for those of you who are following along and pulling your credit report, please stop me in the chat. Okay, so again, www.annualcreditreport.com. And then you're going to see a tab at the front. It's going to look very similar to the picture I have. And you're going to click the red button that says request your free credit report. Okay. I'm going to give people a couple minutes to do that. Again, I'll put in the chat as well for those of you who want to pull it. Okay. I thought about doing this live with everyone, but I realized a lot of my personal information will be on the screen then at that point. Okay. So when you're on the page, you're going to click that red button that says request your free credit report. And then you're going to be asked to answer a series of questions. What happens oftentimes, especially with survivors, is that the questions that they are answering is not going to match what the records have on file for a variety of reasons. Hopefully this is not the case today, but if that is the case, there's a couple options that you can have. You can either call them or you can submit a report, or you can request a report via mail. And this information I will send, so no need to copy that URL or the phone number. I can send it to everyone. But just so you know that if you are not able to, enter into your account, you'll still be able to get it via snail mail. Okay, so I'm going to give folks a couple more minutes here to fill, all of their forms out. So there's a question in the chat saying, didn't you say earlier that they are charging $8 per report? So the reports are free. What they charge $8 per credit bureau is for the score. So today we'll be able to see your credit report, but we're not going to be able to see your score. For those of you who are following along, once you enter in your information, you get to the next page. If you can send me a Y or a yes or an emoji in the chat, that would be really helpful. Just so I'm not moving too quickly for people. Okay, thank you. I'll give folks a couple more minutes. Okay. So typically what happens is that you are allowed one free report from each of the credit bureaus once a year. So some people will pull them all at the same day and be able to view it for free and just be able to compare the reports. Other people will do it throughout the year. So they'll do TransUnion in January, Equifax in March, and then Experian in September. So you're spacing yourself out. But during COVID, they are allowing folks to pull their credit reports for free on a weekly basis, which is really great. But today what we're going to be doing is we're going to go through the Equifax report. You can pull any of the ones that you want, but Equifax is just the one that I pulled and have screenshots for. And it's the way that I have organized our training today. So here you can, click one, you can click all three. If you want to click all three, the great thing about clicking all three is that you can compare where there may be mistakes in one report, or maybe there's something that there shouldn't be on one report that isn't on another. So click Equifax, and then if you want to click the others, that's okay as well, and then click next. And then something that you need to be aware of is once you close your browser, if you have not downloaded it or saved it, you no longer have access to it. So you're going to want to download your report or save your report or print your report. For some people, your report may be really, really long. If you have a long credit history, for some people, it may be shorter. So just depending on where you are in your circumstances, you're going to want to either save it to your computer or print it. And then they're going to ask you to identify your identity via your phone number or your email address. Okay, so I'm going to give folks a couple more minutes here. For those of you who are following along, if you can just let me that you're done, that you have your report, that would be helpful. Okay. Perfect. I love that people have pulled the report in the last couple of days. Okay. Yeah, you may have better luck on your computer rather than on your phone. So if you do have access to a computer, that would be the more preferred option. But again, I know it's doable on your phone as well. All right, so it looks like a lot of people have their report. So first and foremost, the way that we look at Equifax credit report, the easiest way to look at it from my perspective is to look at your summary. I've blacked out what my information is, but they'll give you the report date, which for those of you who have pulled it today, will be your today. They'll give you your credit file status, the average account age. So the average account age is what we talked about and what factors into your credit score is how long, what is the average between your longest as well as your shortest. They'll give you the number of accounts with negative information, your length of the credit history, your oldest account, and your most recent account. So you'll be able to know like, oh, I had a credit card from 12 years ago that I forgot about, or your most recent account of I just bought a car 3 months ago, whatever the case may be. This can be really, really overwhelming for a lot of people, especially if you have, multiple accounts with negative information, or maybe you weren't expecting your length of history to be a certain way. So again, however you're feeling now, totally valid. It's okay. This is really stressful and it can get really overwhelming. So again, this is recorded. So if you need to step away at any point, just, take a breath, get some water. That's okay. So just thinking through, what does your summary look like? Okay. All right. And then once you have looked at your summary, you also want to look at your credit accounts. This is going to be a really good overview for you. And also understand that just because something is on your account doesn't mean it's actually yours. It may be that it's there fraudulently. It may be that, you experience identity theft. There may be other things going on. So, you don't have to take everything at face value on your credit report. So revolving is what we typically think about: credit cards, that kind of stuff. If you have a mortgage, then this is where that would be. Installment is more like your student loans, your personal loans, your auto loan, that kind of stuff. And then other bills will fall in under here. So you'll see the number of open accounts in this column. Accounts with a balance. So a balance is that you owe money. What your balance is here. What your available balance is, how much more you have to spend, that you are able to spend. Your credit limit, which is like if you have a credit card that has a $5,000 credit limit, then that will be shown there. And then your monthly payment amount. And then the question that I see in the chat is, what does it mean when you seeing potentially a negative on an account, but you have paid it off? It may be that the information did not get sent to the credit bureau. It may be that the credit bureau has it wrong. So those, that's why we have to, it's a good idea to go through your credit report, because there may be information that is wrong. Okay. Okay, so I know we just looked at the summary, this credit account. So I just want to check in with everyone. How are you feeling? Maybe this is how you're feeling now, or how you were feeling when you did pull your credit report. You can give me an emoji, you can write something in the chat. It looks like somebody has an open account from an ex-husband. Get frustrated. Some companies will not remove things. Yeah, it's a really frustrating experience to be sitting there for hours and hours trying to talk to these companies about information that is wrong. I totally agree. Okay. So I want to go through we looked at the summary and we looked at your credit accounts. So I just want to go a little bit more big picture here. So your credit report for Equifax is organized in a very specific way. It goes through your summary first, which we looked at. And then from there, for those of you who have really long credit reports, it may be confusing, but it's going to go revolving accounts, which is all of your credit cards, mortgage account if you own a home, installment accounts, which is your car loans, your student loans, your personal loans, all that kind of stuff. Other accounts, and that falls under like child support, rental agreement, that kind of stuff. And then it's going to show you inquiries here, where it's really, you don't need to look at the soft inquiries because it's really not that important, but you do want to look at the hard inquiries. The hard inquiries are where a lender said to the credit bureaus, let me check their credit score because I might want to lend them money. So if you have a credit inquiry, if you have a hard inquiry that you don't recognize, then it may be that somebody has access to your personal information and is going around trying to shop for loans under your name. And then after the inquiries are going to, oh, and I saw a question earlier, how long do inquiries last on your credit report? And it's about 2 years. About 2 years they'll drop off. And then public records, so bankruptcies, judgments, liens, that kind of stuff is also on your credit history. And then you'll go into, if you have anything in collections, that's where it'll go. It'll be behind the public records. If you are having a hard time kind of like organizing your credit report because there's a lot of pages, it's just helpful to follow this guide so you know kind of where you are in that process. And then even within, so this is kind of like big picture, right? Big picture organization. But then for the accounts, so the revolving account, the mortgage account, the installment account, and the other accounts like child support, rental agreement, all of that stuff, even within those, it's broken down into a different subset. So with the revolving account, they're going to be divided into the following sections. One is going to be the summary. So it's going to give you the big picture overview of how much do you owe, essentially is going to be the most important part of that summary. And then it's going to give you the account history. The account history is really details on your high credit, your credit limit, amount past due. So it's going to give you kind of this basic understanding of where that specific card is, credit card or mortgage or loan is at that moment that you have pulled your report. And then it's going to give you the payment history. And oftentimes the payment history for those of you who have really long payments, like have been with a credit card for decades or years, this is where it's going to get pretty long. It's because they're going to like give you a green check mark every time you have made a payment on time, and they'll give you a number when a payment was late. And then they'll give you account details, which is just a more detailed summary of the summary that you saw at the beginning. Okay. So that's basically how a credit report is organized. But oftentimes, even that's super confusing, right? So what we have done is we have created a chart, and I can send this to you in the follow-up email that is just kind of helpful for us to think about what does this look like on paper when we take out all of the extra space that we don't need. So the way that this is set up is the question is, what is the loan, right? For some people, it may be an Old Navy credit card or a car loan or a Chase. And then we think about what kind of loan is it? Revolving or installment or service. So Old Navy is a credit card, which is revolving. A car is a car loan, which is an installment because you got that money upfront and you're making payments on it over 5 or 6 years, or for some people, shorter than that. And then maybe it's a utility bill, which would be a service. And then here, you're going to be able to see how much you owe, but you're not going to be able to see your APY at this point. But it's just helpful while you're doing this to understand what your API is so that you know what you are being charged for interest to have been borrowing that money. And then thinking about what is the monthly payment. Again, you can find this under account history, account summary. And then you can see, is it overdue or up to date, right? Overdue would be if you have missed payments, if you have a balance that hasn't been paid in a couple months, that would be overdue. Up to date is you get that green check mark. And then is it in collections? And if so, how long has it been in collections? So you just want to make sure, you have an understanding of where all of your loans are. And I know this is, really scary and stressful for a lot of people who have, a lot of times for, a lot of us, when we think about financial, we just don't really want to deal with it. We want to push it aside. And trust me, I know that feeling. And so, this isn't for everyone at this moment in time. The report does not show your APY. Your APY is going to be shown on your loan documents, if you have a credit card, on your statements. And then for those of you who are survivors of economic harm, thinking about, is this my debt to pay? And we'll get through what that means in like a legal sense, and then really thinking about what your options are when you are a survivor of harm. And then you want to think about your next steps. So your next steps can be anything from do nothing to pay the debt, to think about paying the debt, to set up a calendar, to not miss payments. Whatever your next steps are, that's where you can put that there. Okay. Let's do a quick stretch, and then I would love to hear from all of you. For those of you who did pull your report, where's your head at? What are we thinking? I want to do nothing, but I know that's not a good idea. Yeah. I mean, when it comes to credit and financial harm, I really want to stay away from, just like we don't want to say good credit, bad credit, I want to stay away from what we should do and should not do, right? It's it's the circumstances that we are working with right now, and we don't want to force ourselves to be doing things that are not going to be supporting our healing, whatever that looks like for us. And for some of us, maybe the best that we can do right now is to stand still. And the fact that, those of you who have pulled your report and you know what's on it, that's a huge step already, right? It's a huge step to say, this is really, really scary, but I'm going to pull my report because I want to see what's on it. So just thinking about that and just showing yourself a lot of grace, to show yourself a lot of kindness. I always say you really should treat yourself the way that you would treat your best friend, and talk to yourself the way that you would talk to your best friend. And, thinking about what that looks like for you. Having a hard time being consistent. Don't like being seen as risky, most definitely. So again, there is no should out of this conversation, this workshop today. There really is just what you want to take from it and what you want to do with it, right? There is no, I should do this, I should have done that. We want to take away all of that shame, all of that guilt, because it's really, for us, it's really thinking about how do we move forward. And sometimes staying still is moving forward for a lot of us. Then you really, it feels like they're making it confusing on purpose, right? It's so not intuitive for how a lot of us think. And it really is frustrating because people should not have to, it should be easy. They should be able to see the report and know exactly what's happening. Okay. I see the other questions. I'm gonna hold some of them. I'm not answering yet because they will be answered. And others I want to hold till the end. Okay, so let's get into addressing debt that is a result of harm. There's a lot of survivors on this call, and those of us who have debt because of harm, it's very frustrating because we know it's not ours. So I first want to walk back a little bit and explain what is debt that can be a result of harm, right? So these are some examples. These are not all the examples, of course. So examples of debt that can be a result of harm is when a harm doer has taken out debt in the survivor's name without their knowledge or consent. So when somebody is using your credit card without your knowledge, when somebody is signing for a car without your knowledge, but using your social security number and your credit score, when you let somebody borrow your credit card for a certain amount, but then you realize they've racked up so much more that then you had given them permission for. It can also be bills in survivor's name when the survivor did not benefit fully from services. So this is where thinking about service credit comes into play. So maybe it's they put your name on their utility bill and you don't live there. Or maybe they used your credit and your social security number to buy a car that you don't drive, that is not yours. Or maybe they are continuing to be on your cell phone plan that you did not authorize them to be. It can also be more physical or more overt, like a harm doer will threaten or force a survivor to take out that in their own name. So maybe it's threat of violence, maybe it's threat of taking, something that they cherish away if the survivor does not sign for a credit card, if the survivor does not sign for a car, that kind of stuff. That is a result of harm, can also be hospital bills, right? If a survivor was harmed physically and they had to go to the hospital and they're left with a bill that is a result of the harm, it can be therapist bills. Those are expensive. Mental health is really, really expensive. It can be legal fees, right? Those are all expensive services that, had it not been for the harm, they would not have had to endure those costs. Evictions and car possession. So if a survivor lost their job because of the harm and was unable to keep up with the bills. That is a result of the harm that they experienced. And then the most common one that I've seen in my work has been credit cards being taken out and or used without permission or with coerced permission. Again, these are just some examples that we've experienced, but I would love to hear from you all if anyone is comfortable sharing what other debts that you have experienced or have worked with clients who have experienced it. So thinking about that, that is a result of harm. Or do any of these, jump out at you that maybe you didn't think about as being a result of harm? Oh, that's a big one. Filing for tax refunds. We saw that a lot during the pandemic when people either claimed dependents, that children who did not live with them and they did not care for, or filing tax refunds in terms of saying, that they are dependent on this person when they are not. I'm seeing a lot of utility bills, credit cards maxed out. Courts, the legal system not being supportive of survivors, but are actually being harmful. We have to remember that, when we think about harm doers and survivors, oftentimes it is interpersonal. It may be an intimate partner, it may be a family member, it may be a friend, but oftentimes it is institutional as well. Co-signing, yeah, when somebody says, I'll co-sign for a car, and then the person never pays, or maybe they're coerced into co-signing. Okay. So what are your options, right? When you have harm, when you have that as a result of harm. So first and foremost, before I get into any of these, I always want to say, do what is safe for you. No one is going to know what's safe for you better than you do. So some of these options may not be safe for you. And if that's not the case, if that is the case, then you do not have to engage in those. Okay, so really when it comes to credit cards, you have three options. You can dispute it by calling the credit card companies, you can refuse to pay it, or you can pay it, right? Those are really the three options that we have. If you want to dispute it, saying this is not my debt to pay, then you can contact the credit card companies, the collection agencies, or whatever other institutions are, hounding you for this money, and you can dispute the debt because it was coerced, fraudulent, or a result of identity theft. What often is the struggle here is that our credit card companies, our banks, our financial institutions are not survivor friendly and they're not survivor centered. And as a result, credit card companies will only say, okay, fine, like we'll remove this debt if there is an identity fraud report filed with law enforcement and or the Federal Trade Commission. For a lot of survivors, going to law enforcement is not safe. And there's a lot of reasons why people are not ever going to file a identity fraud report for the economic harm that they experienced. So this is not an option for a lot of survivors. But, if you are one of the few who did file an identity fraud police report, then you have more of a standing with the credit card companies, unfortunately for you, but unfortunately for a lot of the survivors who this, leaves out. You can cancel your credit cards. If somebody is actively using your credit cards and you did not authorize them to, you can cancel it. But again, this is not safe for everyone, right? So you want to make sure you just want to check in with yourself, like, is this going to be safe for me if I cancel this credit card? And then you can refuse to pay, right? If you refuse to pay, then your credit card debt will go into collections. And typically it'll drop off within 7 years, right? I like to say this is an option for you if you want to choose it. There, again, no shame, no judgment, that you just have to do what's best for you. The pro of, not paying or refusing to pay is that this is not your debt, so you're not going to pay it because it's not yours. You didn't benefit from it. The con of it is that it is going to affect your credit score for the next 7 years or so. And then you do have the option to pay the debt. Again, this is so unfair, so unjust, and it makes me so angry. But if you decide that it is best for you, your family, your financial future to pay the debt and move on, then that is an option as well. Okay. What are some other options that you can have? You can engage in financial safety planning if it is safe to do so. So this includes stuff like creating your email address so that you can open a new online bank account. Maybe it's changing your online account information to prevent other people from accessing it. You can start a new bank account. Checking your credit report regularly can be a step in financial safety planning because then you can see, okay, in the last 3 months, nobody has opened an account fraudulently under my name. You can seek legal compensation, and we'll talk about what those options are in a little bit. You can file for bankruptcy. That's an option, or you can or you can change your social security number. I'm seeing a question about debt consolidation to pay credit cards and getting someone else to negotiate with credit card companies. So I don't have a slide on this, but I'm going to say 99.99999% of the debt consolidation companies that you see advertised are not great. Right? They are not great. They are going to take your money. They're going to take a chunk of your money, and they oftentimes are doing things that you can do yourself. So they'll say, we can call you, we can negotiate for you. You can negotiate it for yourself, right? Debt consolidation can be an option for some people depending on their circumstances, but you never want to take on more debt to pay debt off if it's not going to be beneficial for you. So unless you get like a really good interest rate, if you're maybe you have maybe you've gotten to your credit score to the point where you are going to get a good interest rate, or you get a good promotional value and have exactly a plan to pay it off. But you don't generally, if you don't have a specific plan, you don't want to take on debt for more debt, and you don't want to hire somebody to quote unquote like negotiate for you, because from my experience of doing this, I've never heard of a company that has done it well. I've never heard of an experience that a survivor has had with one of those companies that has been good. Okay. Another option that you have is if somebody is actively like using your social security number, is they're opening accounts or they're doing hard inquiries, you can implement a credit freeze, which is sometimes also called a security freeze. Again, I want to emphasize if this is safe for you, right? And what a credit freeze does is it allows you to restrict access to your credit so that no one else can open a new credit account. This, however, includes you. So when you have a credit freeze on your social security number, on your credit line, that means you, along with everyone else, cannot open a new line of credit. So if you are in the market to buy a new car, then this probably is not the best time to implement a credit freeze. The credit freeze is going to last as long as you want it to. You have to remove it, and in order to implement a credit freeze, you have to contact each of the 3 bureaus, which is annoying, but you have to contact them individually and say, I want to implement a credit freeze that no one, including myself, can open a new account. This is, an option for people who is like actively experiencing fraud, but again, it may not be safe for everyone. So just keep that in mind. And then you can also implement a credit alert. So a credit freeze is when no one, right, can open accounts. Think about a fraud alert as like a step below that. So it just makes it more difficult for somebody who is trying to open a new account. They're going to have to like prove, like show identification that they are who they say they are. So it'll be, harder for somebody who may be trying to open like a new credit card in like a store, where oftentimes things are a little more lenient. But when there is a fraud alert, it's going to just be harder for them to do it. A fraud alert only lasts 1 year though, and then you have to renew it every year. And what's great about the fraud alert, however, is that you only have to contact one of the 3 credit bureaus, and then they are required by law to tell the 2 other that you have a fraud alert on your account. Okay. What are your legal options? So it depends on your state. It depends on how long it's been. It depends on how much time you have to invest in it. So I would suggest that everyone go to our compensation compass. It is an online tool where you input your information about like how much money you're seeking for, how much time you have to spend on it, if you want to see your harm doer or not. And based on the answers you give, they'll give you a legal pathway forward. So for example, it may be civil tort is the option, the legal option that you have, or it may be criminal restitution is the legal option that you have. Okay. I know I have a lot of questions in the chat, so this is the time for it. I'm just gonna go through the Q&A first, and then I'll try to catch the ones in the chat. So in the Q&A, somebody wrote, how does bankruptcy impact your credit score? Does FreeFrom have virtual trainings and programs for survivors? As a survivor, I do not even know where to start and haven't been able to get support for years locally at DV shelters and programs in my county. And when I go to general financial places, I get overwhelmed disclosing and trying to get support as a survivor. I feel like they don't understand or know how to handle my situation. My financial situation has always been a huge strain and my stress on well-being. I'm at my wit's end. Okay. So first of all, thank you so much for sharing. I think you have really, gotten to the heart of why FreeFrom exists, right? We look at the gender-based violence movement, and so much of it is not focused on long-term financial healing for a lot of different reasons. And so people who are survivors and have financial issues, they are going to these shelters and they're oftentimes not getting the support that they're looking for. But then when they go to traditional like financial asset building places, it's really, the language is so different. People are not able to explain or understand what a survivor is experiencing and going through. But to answer your question is, how does bankruptcy impact your credit history? So bankruptcy will stay on your credit history for 7 to 10 years, depending on the type of bankruptcy that you filed. You're going to see an immediate drop in your credit score after a bankruptcy, but that doesn't mean that your credit score is going to be always at that point. It will over time if you make consistent payments. If you make your payments on time, it will rise, but it will stay on your record for 7 to 10 years, depending on the type of bankruptcy that you filed. Okay. Is there another crediting system? Is there another crediting system opening a bank account is reported on, or when someone is evicted, is it reported under the same crediting system, or is there a different one? I think if I'm understanding the question correctly, is where is evictions filed and how does that end up on your credit report? I think it's the question. Okay, so I don't do housing, so if anyone does housing, I would love to hear this. My understanding is that your evictions are public record and your credit history is linked to that. Does anyone know differently? I would love to hear. I know there's a lot of knowledge in this room. Okay. If you open a bank account, is it reported to the same crediting agencies? Your bank accounts, if you're opening like a checking or a savings account, is not reported to credit agencies because you're not borrowing money. Susan is saying there is another agency for bank accounts. Susan, I would love to hear your chat if you feel comfortable sharing. So my understanding with checks is that if you have like a checking or a savings account that was like overdrawn, like if you have fees that you didn't pay, then it will go through checks. And some banking institutions are part of it, others are not. So if you try to go to another bank where they are part of the same network, then they'll see, oh, you just, owe $200 to Bank of America. We're not going to let you open a bank account here. Right. Okay. I'm saying I have no credit score. It does not exist. Judicial financial abuse forced me out of the standard economy for decades. How can I build a constructive credit score? So for people who, what we call is, for people who have no credit score at all, it's not low or high, it doesn't exist. What we oftentimes recommend, if you can, is to get a secure credit card. So a secure credit card kind of acts like a debit card. You put in money at the beginning and you use, and that's going to be your limit. So let's say it's $500. You put in $500 at the beginning and you use it throughout the month. And then at the end of the month, you pay that back. So it's a secure credit card in that there is money that you've already put in at the beginning that you can take advantage of. And then another option for people who are credit invisible is often what they're called. There is an organization in the Bay Area called Mission Asset Fund, and they have something called lending circles. Lending, it's really great for people who have scores that they're trying to raise, or scores, they have no credit score history at all. It's one way to start building your credit history. And then another way that people can think about it is they have oftentimes, a lot of banks will have credit cards that they call like light credit cards, and they're mostly for like college students or people who are trying to raise their credit score. And if you are trying to do that, then there may be banks who you, even though you're not a student, they may also allow you to participate in a version of their program. Yeah, so I'll put in, so the organization in the San Francisco is called Mission Asset Fund, and the program they have is called Lending Circle. So if you just copy and paste what I put in the chat, you'll be able to see the program. And hopefully they have it in your area. They do work nationally, but they aren't everywhere nationally. Okay. I'm not seeing any more Q&As, questions in the Q&A. Does anyone have any other questions? How do I decrease my interest on my credit card debt? Okay, so something that a lot of people don't know is you can call your credit card company and negotiate your interest rate. So you can call your credit card company and say, you know, I want to pay this off. I want to pay the debt, but this interest rate is just really too high for me. And you can ask them. I've worked with a lot of survivors who have called credit card companies and negotiated their interest rates. A lot of people whose debt is in collections, they'll often think about, you know, thinking through like, oh, I need to use a debt consolidation company. I have to, you know, have somebody negotiate with collection agencies for me. One, you don't have to talk to collection agencies if they don't want to, even if they're harassing you, if they're calling you every day, calling you all times a day. There are templates online that you can send them via mail that says stop contacting me, and they, by law, they have to stop contacting you. And then you can also negotiate with collections if you want. They say you owe me $3,000, and you can say, I'll give you 5, right? Or I'll give you 2. And then from there, you just kind of negotiate and think about how much can you actually afford. So to answer your question is you can call them and negotiate your rate, your interest rate. There's also an independence project for survivors to build credit. Yes. I don't know if this is the same program, but there is a program where I think it's a $5 per month and you build your credit that way. So I think everyone should check out that link. I'm going to also put it in the chat. Thank you so much for sending that. On the credit report, what is the difference between high credit and credit limits? I have to see what you're referring to. Maybe if you feel comfortable, you can send me a screenshot. You can email me a screenshot after, and then I can take a look at it and we can talk about that then. Because I'm not quite sure where that is and what is it referencing to. But I have my email address at the end, so I'm happy to take a look at any screenshots that you want to send. Is it ever good to close credit cards that are not helping your credit score? So it depends on what you mean by not helping your credit score. So it depends, right? So if I'm not quite sure how a credit score would not help, how a credit card would not help your credit score, there's, I think, a lot of different ways that can work. But the pros and cons of closing a credit card generally is, the pro is maybe if you're using it and you don't want to, maybe if it has an expensive annual fee, maybe if maybe if the interest rate is really high, right? Then you can close that credit card. The con of closing a credit card in relation to your credit score is that, one, it'll reduce your average, it may reduce your average length of history of your credit report, your credit history, and slash, or it may kind of tweak with your credit utilization, because now that you no longer have this line of credit open, you know, if you had, like, let's say you had two credit cards at $5,000 each, that was the limit, and you have one $5,000 one and the other one is a $5,000 limit, and together you have a $10,000 credit limit. For example, if you spend $2,000 and you are technically in credit card debt for $2,000, then that's $2,000 out of the $10,000, which is a 20%, yes, 20% utilization fee. Versus if you cancel that card and you know you only have a $5,000 limit, but your debt remains the same at $2,000, then it would be 2,000 divided by the 5,000, which is a 40% utilization, which is much higher, and that is going to affect your credit score. So again, it depends. Okay. For your new credit card, how do we tell clients to build for a new credit card? How do we tell our clients to build their credit? For example, a credit that they have was a $300 credit. If they pay it next month, does it build their credit and they can enhance their limit? So if they pay it on time, if they pay it in full, it will, well, and slash, or if they pay it in full, it will increase their credit score. And they can enhance the credit limits. Sometimes the banks will just call and say, like, we, raised your credit score, a certain amount. Other times you can call and request that they increase your credit limit. The pros and cons to increasing your credit limit is, one, as your credit utilization increases, as your credit limit increases, if you keep your costs the same, then your utilization will be higher. But if you're the type of person where as your credit limit goes higher, you spend that much money, then that's a con. And that's usually why banks will, increase your credit limit, is not because they quote unquote trust you, it's because they know if they give you $12,000 to borrow and you borrow $12,000, then you owe them a lot of money in interest. Okay. Is it enough to pull pull credit reports from one agency, or should I pull it from all three? How do I freeze my credit? Are there any charges to do that? Okay. So I would say, because it's COVID and every week you're allowed free report, there's no harm in pulling all three, because there may be mistakes in one, there may be things that are, fraudulent in one that is not in another. These credit reporting agencies are not perfect, and they are going to have mistakes on them. So it is a good idea to just check on your report, like, oh, I paid this off. Why is this still here? This is not mine. Why is this here? I've never heard of this company. Why is that here? Right? So you just want to check. You can freeze your credit by contacting the agency, and there is no charge. Okay, last question for the minute. Is there a credit card I can transfer currently debt of $35K with zero interest, ideally with no transfer fee? It depends on what your credit score is. If you have a higher credit score, then you're more likely to get an offer of like a 1 year zero interest transfer fee. But it really depends on your specific circumstance. Okay, everyone, we're at 12:30. I know that was a lot of information. If we can just spend a minute, just closing it out. I highly suggest all of us to think through a to-do list, if that's how you work. Maybe we just want to sit with the information. maybe you want to talk about it with somebody, whatever that means for you, that's totally fine. But let's just take a couple more breaths and then we'll close out. All right. Thank you so much for engaging with me today. Such a pleasure to be here with all of you. I appreciate all of you so much. Thank you so much for coming. I appreciate the engagement. If you have any questions, please feel free to, you can email me directly. You can engage with us on social, whatever works for you, whatever you're most comfortable with. And then from here, I'll say goodbye. I hope everyone has a wonderful, wonderful rest of your day. And we'll see you next time. All right. Bye, everybody.